Hey guys, I hope you're doing well and welcome to today's edition of a special overview of the non-farm payrolls. Numbers are going to be out in about 10 minutes time, and people are looking for an increase of about 195,000 jobs. That is the latest estimate by Bloomberg. Of course, if you're watching other sources like Reuters, it could sometimes be a bit different. And the reason for this is that they ask different sets of economists, right? So they've asked maybe 50, 60 economists what they think the outcome is going to be, and then they just grab the midpoint, and that's sort of the estimate. Well, that is the estimate. So we're going to look at that. But before we start, I need to stress that trading financial markets unfortunately is risky, and there's a risk that we lose all of our invested money. In the very bottom here, you have the risk disclosure statement that you can check out for more on that. So good, so we're going to conduct some live technical analysis, try to see if there's any interesting setups and sort of market movements to potentially trade. Please note though that this is very short-term trading and it's not for everyone. And let's begin. So again, 195,000, that's sort of what's expected. The unemployment rate is anticipated to remain at 3.8, and average hourly earnings is anticipated to tick up from 2.7 to 2.8. And what I found interesting is this is wage growth. I don't know if you can see the image, but on the upper, the wage growth has pretty much been trading sideways between 2.5% growth and 2.9, and since pretty much the beginning of 2018 and 17, sorry. So for a little bit more than 1.5 years, we've been trading sideways here. And obviously, if we go up above 2.9 to maybe 3%, then that's really going to cause the market to get excited about potentially more Fed rate hikes. So it's not so much about the headline number, but of course, if the headline, which is anticipated to be 195,000, if that is say 150, then you could potentially have a weaker dollar on the back of that. The dollar is overall a bit weak. If I show you the dollar index, then you'll see that the dollar index is actually challenging last week's low. You can see here, right? This is last week's low, and let me see here. There we go. This is last week's low. The price is trying to trade below this level, and if we take that level out, we might go down to the June low, and in essence, we'll see some pressure here. Maybe the euro dollar will, rally up to 118, and then I'm doing a webinar. I'm not talking though. Sorry about that, guys. Sorry about that. So the market here could potentially push through certain levels. Now, there's a short-term strategy that I like to employ, I like to use, and this is a short-term breakout system. And we have some interesting price action in the dollar CAD, but we have a very, very tight range here. And the market is trading sideways between 107 and 131.64. And it's interesting because it's a very tight range. It's about 50 pip. And if the market, trades to the upside, and if the market is good, if the data is good, so US data is good, Canadian data is bad, this could potentially push higher. And what traders will probably do, they'll probably buy the break to the upside, allow it to trade to the upside. On the other hand, if it's US data is bad and Canadian data is good, or some sort of way in the middle where it favors the Canadian dollar, we could potentially push to the downside here. And what is the benefit here, what is interesting is you can see that overall the range is quite wide, and here you have a very, very narrow market, which again, a lot of people, what they do is they buy the breakout and then they put a stop loss on the other hand here. So that is what I would could potentially trade on the back of this. Now let me actually load. I'm going to load a different set of pairs or different set of charts that are clean from my analysis. and we'll focus on the CAD today. I think that makes the most sense. Because it's always good to have that narrow range. So with this, of course, comes that you need to focus on the Canadian dollar as well, Canadian dollar data. Here, unfortunately, I don't know if it's going to be up or down. That's the problem. So this is very high risk, so you know, but one could potentially put a limit to sell here with a stop on the other side, and as well put an entry to buy here with a stop on the other side. The way this would work out, though, is that you would submit the orders like 30 seconds before, because this could spike both ways just ahead of the report. Or you just decide that you just want to trade one side. And the idea is that you get triggered on your entry. So if this pushes to the upside, one would quickly analyze the data and see, okay, is it good or is it bad data? And if the data does not agree with the breakout, then one would close the position independently of that breakout. There's other markets here as well. Again, sort of the euro doesn't necessarily have what we need to, doesn't necessarily have sort of that narrow range that can give us a tight stop loss. But take out today's high, obviously 118 I think becomes interesting. Pound versus the USD is again a bit tricky, but I guess on very soft US data, the market could potentially, you know, take out 133 and then we go to the upside. The alternative, if the data is good, I think we're just going to go to the downside. Here is the dollar yen, and dollar yen is actually something you also want to focus on. This is a daily chart, and I know we're not really close to that level right now, but this is the high of this week, which is very close to the high here from May. And if we take out this level, which makes sense if the data is good, then most likely we'll push to the upside in the following way. So potentially like this, and it could generally be the beginning of a new trend here that's going to last for a few days. So that's something you want to keep an eye on. So let's actually, we're going to flag dollar yen and we're going to flag dollar CAD. Aussie dollar versus the USD could terminate its trend today, but on bad data, terminate that bearish trend, but and could potentially lift a little bit higher, but not sure exactly if that's sort of a good idea to trade. And CDUSD, we're gonna leave this alone for now, and let's just continue. Dollar CAD, we know that exactly what's going on here. With gold, it's interesting as well. Gold is interesting in a way that if the data is really strong, we could potentially break to the downside, and then we'll take out the 1236 and we'll potentially target the lows down here at 1200. The alternative is here, push up like that and like this. Okay. Crude, we'll ignore that for now. We ignore stock markets unless you have questions on the back of that. Something I wanted to show you, which I did an article about just recently, which could become interesting over the next few days, is this, which is the dollar Swissy. I don't necessarily think we're going to break the range today, but on the back of the news that's going to be out, we could potentially have a bigger move. So very good data, in particular wage growth, can cause the market to push above here. The alternative, if the data is actually bad, then we could take out the low and continue to move to the upside. But I think focus for us today, probably dollar yen. So we're gonna do dollar yen here, and we'll make that a 4-hour move. And then for everybody scalping, actually, and here we have Canadian dollar, which should be a daily 4-hour chart like that. Okay, so we are literally 10 seconds away. So it's gonna come with a lag, but hopefully that'll be fine. the unemployment rate rose. Okay, the unemployment rate rose a bit to 6%. Average earnings at 2.7. So overall, at least US data, on the US data is a little bit softer than expected. Canadian data, on the other hand, so let me see here. Canadian unemployment rate also a little bit weaker, 6% versus 5.8 anticipated. And let's check here, it's a bit confusing this. Let me show you. So here's Canadian unemployment data, that's slightly softer. Here's Canadian numbers, 31.8. So this is the Canadian data. So overall, I think the Canadian data was not that good because of that quite big uptick. There could, of course, be other reasons explaining this. You see here Canadian participation rate increased a bit, but I think overall Canadian data, there's no reason to buy the Canadian dollar on the back of this data. And on US data, so non-farm payrolls printed 213 versus 195 anticipated, so that's good. However, though, the unemployment rate, it did tick up a bit. Let me see here. The way they organize this is a bit weird, even though it's like here unemployment rate 4%, and our average earnings at 2.7. So as well, US data here is actually not that good either, to be honest with you guys. So from a CAD perspective, well, so the initial market reaction here in the dollar CAD was to push this a little bit lower. The question is if people are going to bother to trade this on the back of this data report. We're pretty much back into the range. Canadian data was not good. The US data was also not good either. So that explains why the dollar yen is a little bit lower on the back of the number here, because, well, just bad data itself would explain the dollar yen moving down a bit. But let's take a look at what's going on in the other markets. So the euro is reacting in a way, which is expected, really. The numbers were not good from the US perspective. And I think we're going to have a bit of a squeeze here. This market could potentially head up to, say, 118, which is pretty much the levels and numbers that people were looking at before, ahead of we had a bit of a push in the dollar to begin with. So you might remember I talked about the dollar index. Well, the dollar index, see here, it just traded below last week's low. So in general, I think the dollar could soften a bit, but probably not a good idea to focus too much on the dollar CAD. On the other hand, maybe euro dollar is going to push up a bit. I think that's fair. Pound dollar could potentially end its downtrend today, but it's too early. It needs to take out 133. Aussie dollar as well, moving up quite aggressively, could potentially end its downtrend today as well if we take this level out. New Zealand dollar versus the USD is heading to the upside. We'll probably continue to head higher as well. Whereas gold should actually be higher. Not really sure why it's where it is with these numbers. But overall, US data was slightly softer than expected. Again, wage growth did not meet expectations. You can see this down here. And then you have the unemployment rate would ticked up with 4%. And then you have the headline figure, which was 213, and that's not really that special. Rather, it's the unemployment rate that is interesting here in this market. Sorry, it's the unemployment rate and wage growth, with wage growth really being the most important one. And on the back of that, slightly weaker data, weaker dollar, which I think makes sense. and you can potentially have the euro push a little bit higher here. So do you have a trade idea on this? Well, not necessarily, but you can definitely sort of look to. I do think, for example, in the Aussie dollar, if it goes higher, I think traders will close out their short positions. Okay. Do you guys have any questions? Okay, so it doesn't look like we have any questions, so we're gonna wrap things up. If you like the presentation, don't forget to hit the like button. As well, don't forget to share as well. Right, guys, thanks so much for watching. I think in general, again, we'll have more dollar weakness. If the euro dollar goes up to 118, then that would not surprise me. Now, if we take out the actual high, so if we indeed take out that ECB rate meeting highs, still something that we would need to wait and see. But obviously, something that goes all the way up and corrects all the way up. And yeah, so we would need to see exactly if we're going to take this level out or not. Pound dollar, again, sort of struggling. It's moving to the upside. We'll probably continue to push to the upside, but it's too early to know if we're going to take out the high here from June 22nd, which would end the long-term trend. But definitely in the short term, more dollar strength. And you can look for different pairs for that, but not the dollar CAD because of the mixed numbers. But definitely, maybe the Aussie probably could be something interesting. A little bit of a push to the upside, and then we'll see. But most likely bullish today and bullish Monday, Tuesday, and then we'll see in things like the euro if we're indeed going to take out that ECB rate meeting high. Thank you so much, and have a good weekend. Thank you.